UK tax. Sharp one. You're welcome to Paper P6, UK tax system. Advanced UK tax. This is all what the tax is all about. The summary and overview of everything. It's an advanced FC anyway. FC is strictly, I can say 80%, if not 90% calculation, 10% theory for FCs. Whereas for P6, I'll say 50-50, if not 60-40. This is the written aspect, and this is the calculation aspect. And of course, this calculation will form part of your workings. They're not going to show you when you are writing, when you are solving a case question, you don't include your solution. Your workings will form part of your appendix. You're going to make reference to your main notes or solution rather. Okay, UK tax system. Everything is still the same thing. What you learned in F6, still the same thing. The principles are the same thing. But except for the way the exam is being structured now, and we have other things that are not tested in F6, which I will tell you in the course of the class. Okay, the income tax system, the UK tax system, you should know, okay, we are in the UK, as you know, we are in the UK. Why do we pay tax? Why do government take tax from their citizens? Why? They have their main purpose. They have their objective. And of course, when in the UK, their main source of revenue is what? Taxation. The body that administers tax in the UK still remains the HMRC. In case you've forgotten, our Majesty Revenue and Customs. That's the body that administers tax. The governments, they have a way, they didn't just tax because they want to tax, because they want to generate revenue. Yes, they want to generate revenue. But they do it for lots of things, to encourage some things and to discourage some things. Okay, encourage individuals to save, to cultivate a habit of savings. That's one of the things they want to encourage. One means of doing that is by introduction of this account, ISA account. If you still remember, this account is called individual savings account. This is an account in which if you should save into this account, any interest yield on this account, irrespective of whatever you use it for, it will be tax free. And the maximum amount you can invest is 5,640 in that account. Okay? That's one of the things they want to encourage. One of the things they want to discourage is smoking. They want to discourage smoking. By so doing, it tends to impose more higher rates on the importation of all these tobaccos, all these drugs, just to discourage people from buying them. Because, of course, it's not like they are stopping the importation totally. You still bring it into the country, yes. But when you are coming to the country, you have the measure. When I get to the country, you've calculated your cost, your selling price after all, and you've incorporated to a large extent the tax you're going to pay when you don't know the amount you're going to pay. When getting to the country, you find out that the rate of tax that you're going to pay on the importation is very high. You will either be deterred from importing another one into that country, you get, or you tend to do what? You increase your price. So I'll be able to recoup for your cost. By so doing, it will deter some. Of course, you know we have some exceptional consumers. Even if you should sell one stick for £1 million, those that will buy. Do you get? But it will, to a large extent, reduce the rate of consumption. So they want to discourage, though they know that the environment is so good that smoking, they say, is dangerous for our health. But concerning the environment, there are other ways in which you can ease off the cold aside from smoking. Okay? Another thing is environmental control. Environmental control. All these carbon manufacturing companies, their wastes, they tend to either give them grants to manage their waste or impose more little tax on companies that emit low emission. Do you get? So if you are a company that emits more emission, you know you pay more tax. You tend to want to control your pollution so as to pay lesser amount of taxation. Okay, that's just by the way. We have various types of tax. We have direct tax. Direct tax is the tax that is being imposed directly to the taxpayer. The taxpayer pays the money directly to the HMRC. Directly, there's no middle party. You're paying directly to the HMRC. Whereas indirect tax is a form of tax whereby there is a middleman collecting the money, collecting the tax from the taxpayer and giving it over to the HMRC. Do you get? In that case, three parties are involved: the HMRC, the middle person, and the taxpayer. Do you get it? Okay. And an example of direct tax is income tax. Example of direct tax is this. Example of indirect tax is VAT. An example of indirect tax or direct tax is Irish. It has both elements of direct or indirect. We won't get there, I will let you know. Okay, and you know what tax evasion or tax avoidance is? One is illegal, the other one is legal. Which one do you think is illegal? Illegal. Which one do you think is illegal? Evasion is illegal, avoidance is illegal. Evasion is illegal, avoidance is legal. Okay. Another thing that we just discussed actually is okay, what about proportional tax, regressional tax, proportional tax. You pay a particular percentage irrespective of your amounts. The regressional tax has to do with the more you earn, the less you pay. The more you earn, the less you pay. That means the less you earn, the more you pay. Ideally, you can say, okay, how is that possible? The less you earn, the more you pay. Now I use an example of 4. This 4 scarcity. You can say this. We have 4 scarcity now. Imagine you earning £10,000 and I'm earning £5,000, and we both needed to buy 5 litre worth of 4. Let's say that would just cost £1,000. We both bought it. Who's paying more staff? You know, a larger proportion of my own income is going. Though we are buying the same amount, but you tend to pay less amount of it. Me, I'm paying higher. It's taking a larger proportion of my own income is being spent on that amount. Do you get it? That's regressional tax. Okay? Then, majorly, we just went straight to income tax. Income tax. And I'm going to split the formats. Income tax is a tax that is being imposed directly, like I said, it's being imposed to you and I, individually. And it's being based on what? Your earnings. Earnings. And we have the formats. This is the format. Non-savings, savings, dividend, and what? Quota. We have some items that comes under here. The first one, mostly employment income. In some textbooks, you see other income as non-savings. It goes under non-savings. Trade property income. It comes there. You have trading profits. It comes there. We have building society interest. Here, we normally gross up at 20%. So you say, not 100, but if you got given to you, if it is less, you gross at 20%. This is the figure. It comes here. Here, you also have bank interest. Bank interest is also gross. Same way at 20%. Then dividend. Dividend is gross at 10%. And you have a quota here. So this is just a brief version. There are other things that are not involved as a result of the fact that this is what P6. But don't worry, when you get the news, when you bring this out, I'll tell you where you okay? Now, to refer to this as total income before any other thing. Now, there is one item that comes here, that's relief. Remember, our mission is to what? To tax this individual. But they will not just tax you based on your earned income. They will be taxed based on your what? Taxable income. That is your total income, less any available relief. The relief we're talking about here is bank interest. It could be bank interest. No, we have bank interest. This is bank interest received. Now, this is bank interest paid. And you are only allowed to relieve any bank interest paid if you should take out a loan and use the loan for your business. Then the interest you are paying on it becomes what? Qualifying interest that you are allowed to come and remove from here. But if you should take out a loan, okay, you take out a loan, you presented the proposal to the financial house, okay, I want to use this for my business. Now, they give you the loan. As a result of it, you now later on turned out to the loan, you now decide to divert the purpose by spending it on what? Either your mortgage or any other thing. It will not be an liable expense. It should be an liable expense. So you have to wash out, we call it qualifying purpose. It has to be qualifying purpose. The purpose for which you are using the loan for, it is what? The qualifying purpose.
What do you mean the cycle for that?
Okay, so that's the after that, and of course, if you want to relieve anything from this table, want to relieve anything from this table, you always need to start from the non-saving. If what you have here cannot accommodate, you move here. If what you have cannot accommodate, you move here. You have to remove the total from here. Then this is where you have something. This is your total income before your what? PA. Before PA. Then you now have your PA. Now, personal allowance, it has been increased. I know when you did your listing, it used to be 8,000, 7,445. But now it has been increased. It's now 9,440. 9,440 is the personal allowance. Now, this personal allowance is for age below 64. Okay, it's still the same principle for age below 64. So you do the same thing. If what you have here cannot accommodate, you move here and here. Then this is where you are going. You have your taxable income here. You have our taxable income. On this taxable income, this is what we are interested in. And if you want to tax this, we tax, remember, source by source, based on our what? Total income here. And let me just sharply, 5 minutes or 1 minute, give you the, for non-savings, savings, and dividend. The band, the rates has also been increased. taxing rate is now from £1 to what? Madam? 32,010 like this. Then the rate for this is 20%. 2010. From 32,011 to 150,000. This is 40 what? 32.5%. Then from 150,001 above, this is no longer 50. It's 45%, 45%, and 37.5%. So if you want to tax, what you have to look out for is look at this total income. If what you have here falls below 32,000, of course, you know everything you're going to use here is just the whole of these rates. Do you get it? Then if it is like it's around say 75, that means I'm going to use some of this and some of this. Of course, I know I won't get to this stage. Okay? And that is that. And we also get personal